2025. The BBA is thrilled to have Harry Donnelly from Circuit, Boaz Avital from Anchorage, Stephen Wager from Fireblocks, and Yana Novikova from Ripple. This should be a fantastic discussion, and we encourage all of you to not necessarily wait until the last 15 minutes of today's hour-long session to give comments. If there is something that the panelists bring up, by all means, please feel free to use the Q&A. And before I let Harry take it away, I would just like to give you all a quick overview of the BBA. Wonderful. And then the BBA, we are here really to promote adoption, and that means a heavy lift there is education. We offer many different series. They are focused on educational programs, university engagement, partnership, and again, inspiring innovation in this space for effective adoption. We encourage you to be a member, and I'd like to share our corporate members, give them a shout out. We cannot make any of this possible without them. Massachusetts Tech Collaborative, thank you. Fidelity, clearly a tremendous partner. Fidelity Investments, Fidelity Digital Assets, FCAT, Ripple, thanks Yana, Aon, Algorand, Amber Data, KPMG, Solana, Media Shower, the Crypto Recruiters, Block Health, KeyBridge Advisors, and from our startups, Develop Medicines, FIO, Influx Technologies, Cadena, True Tickets, and for our community, which is, this is all about community, how we can support the Federal Reserve Bank of Boston, Niche, FinTech Women, Tab Group, and Suffolk University. So thank you all to our members. And then all of you listening, how can you get involved? How can you participate? BBA, join as a corporate member. Individual memberships, we love volunteers, we love input. This is all about building community, and we need all three of those components. So corporate member, individual member, and those volunteers. Please do not hesitate to reach out. You can visit our website and certainly reach out to us individually. And with that, I'm going to stop sharing, and I'm going to let Harry kick this off.
Great. Thank you, Karen. Cool. Thank you so much, everyone, for joining us. It's really a pleasure to be here. We have some fantastic panelists tonight. Steve, Yana, and Boaz will be joining us from three of the top custodians out there. And something I'm really excited about is that a lot of people don't really think about custody as a product. It's just hidden behind the scenes. You know, it's there, it's dependable. But that's not really the case. There's a lot more actually happening, and a lot of thought and energy and effort goes into it. And that's why I'm really excited about it tonight, because we get to kind of uncover a little bit and hear from not only one, but three fantastic people at the forefront of it. So super quick on me. My name is Harry, founder and CEO of Circuit. We're a new security solution focusing on automatic asset extraction. This allows you to recover assets, not keys, by instantly sweeping assets to a secure backup location. So with that, I'll hand it over to Boaz.
Hey, Harry, thanks. I'm Boaz Avital. I'm the head of product at Anchorage Digital. For those of you who aren't familiar with us, Anchorage is the only federally chartered digital asset bank in the United States, and one of the original institutional custodians founded in 2017. We provide institutional custody and financial services for everybody in the digital asset ecosystem. We serve a diverse range of institutional investors, managers, and providers, folks like banks. We're an ETF custodian, tons of corporate treasuries, investment funds, and new protocol companies as they're launching and their foundations, helping them start up, get into their customer bases, and safely participate in the digital asset ecosystem through our custody infrastructure, our trading services, and our staking and participation solutions. I'm super excited to chat with you all today about what's going on in institutional custody.
Wonderful. Thanks so much, Boaz. Steve?
Good afternoon, everyone. My name is Steve Wager. I'm the head of product at the excuse me, the Fireblocks Trust Company. I just sell the Fidelity logo there. We are probably the newest entrants to the group. We had just got approved by the Department of Financial Services in 2024, back in August. We went live in September of 2024. So similar to the other custodians in the mix, we're really focused on an institutional service offering, really focused on our cold custody offering as well too, to be able to drive the utmost in technology and security out for the industry.
Wonderful. Thanks, Steve. Yana?
Hi, everyone. I'm Yana Novikova. I lead product management for Ripple Custody. So many of you probably heard about Ripple because of our contributions to XRP Ledger. We also have a payment product that uses cryptocurrency and digital assets to kind of solve cross-border payments problem. However, we also now offer custody. We call the product called Ripple Custody. And 2 years ago, we acquired a company named Metaco for their custody product, and we integrated this offering into our product suite. So I think one difference between us and Steve and Boaz is our product is actually self-custody. So we are not offering a regulated custodian service. We are offering self-custody technology, and specifically to the large and regional financial institutions. Financial institutions is our primary target market, and kind of that's the customers we are going after. So with Ripple Custody, the product has been around for a few years now. It's been part of Ripple for a year, and kind of we've seen a lot of tremendous growth and tremendous adoption. I've been with Ripple for 10 years now. I've been working on payments product. I've been working on I was part of a Ripple X group where we were driving a growing developer ecosystem around XRP Ledger, and now I've been part of the custody product team for the last year. Super excited for our discussion today. And Harry, thank you for having me here.
No problem at all. Thank you for coming, and same for everybody. I'm really excited by this. Let's get straight into it. One of the things I'm sure is on a lot of people's mind is that it's actually a really, really exciting time for custody right this moment, particularly in the US. There's a lot of new regulation and legislation coming into play, particularly for around custody. The repeal of SAB 121 now opens up the door potentially for lots of new banks to enter the space and offer crypto custody services to their own customers, potentially opening up a lot bigger of an audience for crypto. So first question for everybody, how are you guys thinking of approaching this, of dealing with it, and how are you positioning for it? I'll start with Steve.
Thank you. I think it's worthwhile for us to point out that the SAB 121 was actually a blessing and a curse, right? So if I may put it out there, for companies like ourselves, trust companies, SAB 121 gave us basically a moat monopoly for a period of time, for better or for worse. And now that that's gone, I think really what's going to happen is you're going to see obviously an increase in competition in the marketplace. And with that, you're going to see increased competition amongst the big banks to decide how are they actually going to come to market. So the opportunity for us, I think, really comes down to the sub-custodian opportunities. How do we actually plug into the back end of those banks to be able to help accelerate them into the marketplace with a regulated custody offering? Again, where we can actually take a lot of that lift from them in regards to compliance, the technology solutions, as well as helping them simply educate themselves on how do they oversee an entity like ourselves, which they may not have had to do before with a traditional network function, right? So understanding how that technology works, what are the risk factors, et cetera, that they need to be able to employ and understand internally to actually get a sub-custody type of construct approved within their shop, I think is really going to be paramount and important as time goes on over the course of this year.
Wonderful. Thank you, Steve. Yana?
Yeah, we're very excited. So with the US market opening up, in general, Ripple Custody, because banks are our primary customers or primary target market, we've already seen great momentum with banks in Asia and in Europe. We offer solution to HSBC, to BBVA, to Intesa, SG Forge, DBS. All of those customers are already using Ripple Custody. We are proving ourselves within institutional space. So now with the US opening up, we're quite excited to now offer the same product to the United States banks, and with all the learnings we've had from the customers in other regions. And specifically, we do know how banks think about custody, what's important to them, what's their requirements, and how they choose the custody solution. So we are super excited to kind of enter the market and can start getting adoption and signing customers in the States, specifically with the banks that that will choose to self-custody within the US. And I do think there will be a lot of those banks in the market.
Yeah, sounds like a huge opportunity.
Yeah,
Boaz,
definitely.
love to hear your thoughts as well.
Yeah, of course. Anchorage has been a federally regulated custodian for over 4 years now. We have a ton of experience in what it actually takes to operate in this market. It's not an easy space to be in, and to both work with regulators and work at a regulated level that is unlike what anyone else has seen has been not just a great opportunity for us to grow our expertise, but a great opportunity for us to share our expertise with other large national banks and institutions who are entering the space as well. So as this growth continues, I'm really looking forward to a couple things. Either institutions would like to really accelerate their entry into the market, and they can do that by partnering with us directly to offer the digital asset services that they would like to with generally their other institutional counterparties. Or if they want to build their own custody solutions with the help of a company like Anchorage, we certainly have all the experience that it takes to help them deliver that and deliver that quickly and with quality. It's going to be a really, really exciting time. My position has always been the crypto industry is tiny. A rising tide lifts all boats. And hopefully we'll see a very rising tide in the next 4 years.
And Harry, if I could just add on another thought there too. One of the other things I think is probably going to come out of that with the banks entering into the space, we're going to see some price compression. And that price compression may, of course, be long overdue in a lot of people's minds or not overdue in any way, shape, or form for other people, but it is certain to happen. And I also think that that will also help us drive through the additional regulatory clarity that a lot of people are looking for in regards to how do we actually deliver products and services in the US in a way that's compliant and sustainable.
Yeah, I think particularly when Boaz said a rising tide lifts all boats, I see all three simultaneous nodding of heads. I think everyone. So with that, that's the kind of growth outlook. What will be the key differentiators going forward? So from a product perspective, because we have product people here, how are you guys thinking about over the next 12 months, 3 years, 5 years? What does the product look like and how does it change to account for this different market? I'll hand it back to Boaz to start.
Sure. Anchorage has been serving customers for a long time, and what's going to happen in the next 3 to 4 years, though I always find it funny when people ask about a 5-year horizon in crypto, as if we know. But what we found important is our ability to take our very focused client types from a product perspective and serve their needs completely end to end. If you're looking at folks like wealth managers, asset managers, we serve them from onboarding through trading and settlement. If you're looking at a new protocol company, we serve them from pre-launch through TGE to managing their grants to bringing in TVL and even through things like employee vesting and liquidation. All of our services are tailored to help a company completely operate in the digital asset ecosystem end to end. In the coming years, because we expect a lot of changes, I think one of the things that are going to be most important is being able to react fast. How fast can we react to changes in the market, changes in opportunities, changes in the technologies that are being offered on chain, and the things that people are looking to participate in? That's been one of our strengths to date, and it's only going to accelerate in the coming years. A second thing that I think is going to be super important as we grow into crypto adoption into larger institutions is a global presence. Anchorage has regulated custody in both the US and in Singapore, and we have a self-custody offering for folks who don't need regulated custody. And we know that our customers often use 1, 2, or all 3 of these offerings in order to serve their needs and their customers. And a continued global presence is only going to be important because this is a global asset ultimately.
I can pick it up. So I think from our perspective, I do think there are two points or two kind of differentiating factors that I can see that will be emerging. One is what we've noticed with our customers recently is that a lot of them now not just looking for custody solution, and it's somewhat relates to Boz was saying, not only looking for custody solution, but they want all in one or everything in one platform, because they not only now want to secure digital assets and access and manage digital assets, but they also, in addition to that, they want a single platform to enable them to trade those assets. They wanted to stake them. They want to tokenize assets and do it globally in a compliant manner. So we do see this increasing desire from our customers for kind of integrated digital asset service offering, where it's one platform to serve all their needs, and one platform not only from the technical perspective, where all these kind of use cases or services integrated with custody, but also from the business perspective. We do see customers not wanting to sign up different vendors or different providers for compliance versus custody versus trading. They do want to kind of have a single provider, single agreement, and single platform that will enable them to that will solve all their needs within digital assets. So I think as the industry grows, more and more of these all-in-one solutions, having that all-in-one solution will be important. The other trend that we're starting to see also is flexibility, and specifically flexibility with how custody technology can be deployed or how the keys can be managed. So we are seeing customers that prefer on-prem versus SaaS, or that prefer certain key management system, for example, HSM versus MPC. And some of these kind of architectural or deployment requirements are driven by customers themselves, where like if a bank very comfortable with HSMs, they want an HSM solution. They want to connect their custody into their existing HSM that they have. And some of these requirements actually driven by regulatory changes. Kind of as regulations mature and as regulations form around different jurisdictions, we are seeing in some markets custody technology specifically being deemed as critical financial infrastructure. And in a lot of markets, that means that infrastructure has to be onshore, or sometimes it's required to be on-prem. So having this flexibility in how custody can be deployed and how it can be kind of how the key management can work. Again, key management can also be on-prem or in cloud. So having kind of this flexibility in the solution would definitely be something that we will see. We expect that will be differentiating factor, and kind of more and more will become important to capture the financial institutions.
And then I'll just round it out with a couple comments from my side. So, and again, I just wanted to highlight that I'm speaking specifically from the Fireblocks regulated custody perspective, not Fireblocks SaaS. So on the regulated custody side of the fence, I think we're actually a little bit surprised as far as a differentiator goes, that our clients are actually reaching out to us asking for much more tail assets and trend-based assets than necessarily what we would deem to be Class A assets, so Bitcoin and Ether. And our ability to be able to react to that, as Yana was saying, and be able to be flexible to that and be able to onboard those assets as quickly as possible to support the TGEs or the different types of use cases that these clients are bringing to market, I think is going to be important. And that is easier said than done, right? Because in a lot of situations, we have to make sure that the regulator approves of that, or the technology is capable of handling the curve for those assets, et cetera, all of which culminates in our ability to actually react. Another thing that I think is a bit of a differentiator, and I know that there is a lot of strength out there in the market today, is around collateral management, right? So we're seeing a lot of use cases come across as far as borrowing and lending in regards to Bitcoin as an underlying asset in the form of collateral, and how do actually custodians sit on top of that to monitor collateral, track margin, actually ensure escrow positions, et cetera, to be able to ensure asset safety and be able to bring those types of products to market. And I think what we're hearing a lot is at the moment that there is quite a gap in the marketplace right now for collateral solutions, and that those who can actually react quicker than others are going to be able to have a good opportunity to win here. So that's been highly encouraging to us as we actually start to build out some of our native capabilities as a result in escrow and collateral management as well. And lastly, I'll just say, and this is probably the same for everybody in the space, right? But we really, in digital asset custody, hang our hat on security as well as technology, right? So we want to be able to ensure that as time goes on, we're able to continually deliver and differentiate ourselves in the way that we build security products, particularly in the way that we actually track and monitor the way that clients move assets, withdrawals, for example. We're very concerned about deepfakes, AI, quantum, et cetera. How are we going to be able to react to that in the future and deliver a quality and sustainable, I'll say, safe product to clients for end investors?
Great. Thanks, Steve. So it's not any one product. It's almost like a toolkit of different products on top of custody people are really looking for. And you're trying to figure out for the clients that are coming, how can I use this tool to help with this and this and this and this and this? And the more tools you have, the more flexibility you have to be able to help those clients, which
I
is,
think one positive point, if I could say here, is that because I actually have a background as well too in traditional custody, a lot of people complain that traditional custody is commoditized. And I think digital asset custody, we really have a good opportunity right now to be able to break that mold because of exactly what Jana and Boaz were saying, right? Everybody wants everything all the time, nonstop, immediately. And those of us who can actually react and build those, I'll say, suite products and solutions for clients are really going to be able to win out over time.
yeah. And I love that because, as you said, people do point towards custody becoming a commodity. Do you think digital assets is where it can break free? So, kind of related question. Would love to hand that over to Boaz.
Yeah, we've been talking to customers about what digital asset custody means for a long time. There's been a trend in the industry in general to sort of jump ahead to a place where we feel that the infrastructure is super mature and commoditized because we have, very sophisticated transactions and operations happening on top of it. But the reality is that digital asset custody is not like traditional custody. Digital asset custody is not a bookkeeping and record keeping and activity. Digital asset custody is a highly technical, difficult security technology, and not all technologies here are created equal. And so I encourage, to Steve's excellent point, everyone looking for digital asset custody to start at the basics, not look for what we would call sort of like check boxes, and move on, but really understand the core of the security technology that they are signing up for, and choose the best amongst what's available to them, so that they can be safe in not just safe in moving forward with their assets, but also be able to do the things that they're actually trying to do, with the goals of their business.
Yeah, I love that point where, as you said, it's not a bookkeeping exercise, it's much more akin to a cybersecurity operation, and then the tools you have matter. But that then, brings into the question of it's very knowledge heavy, it's quite niche, it's generally not what people's expertise is. How can someone understand how to differentiate and how to distinguish between them? And what are the questions they should ask? Jan, I would love your thoughts.
Yeah, I think the key questions, well, security is definitely one of the key questions all the customers ask, how the keys are secured, and kind of what are the backups and recovery mechanisms that you offer. So that's definitely one. I think one other kind of what we are also seeing now with customers is that, again, because financial institutions and financial asset space is so regulated, a lot of customers now come in with requirements around regulation and compliance, and more like how does your solution solve all these regulatory requirements that my regulator has for me? So kind of making sure that the custody technology and custody solution does simplify those regulatory requirements, or at least make it easier for our customers to comply with those requirements. That's definitely one of the kind of key area or key key area for our customers to check on or to evaluate before they are getting custody product. One other area that we have been also kind of seeing a lot of questions and a lot of requirements, specifically from institutional customers, is around policies and policy engine and governance, and what type of policies they're able to implement with our solution. And that's because Currently, of course, a lot of custody is around cryptocurrencies, but we do expect that over time, it's mostly going to be not cryptocurrencies, but tokenized real world assets, financial assets, and there is already there are sort of requirements around how those how operations should be organized around those assets and what the customers have to enable in order to make sure that those financial assets are secure. So having quite sophisticated and robust policy engine becoming a key requirement because it needs to have hyper granular parameters. It need to have to be very configurable, specifically kind of configurable to very unique needs of every institution and also every jurisdiction. And every jurisdiction has its own, or every market has its own requirements for financial institutions. So that's kind of the governance part of our customers interact with the assets and becoming very, very important within the custody product.
I'll just add on to that to say that I think typically when we start to engage with clients on this type of question, the first thing that we try to get them to articulate to us is, why do you think your assets have to be held in custody? Right. So have you actually put a lot of thought into what's the notion of self-custody versus regulated custody and what's actually driving this conversation and you wanting to enter into a regulated space? Because we think in a lot of situations, and obviously to our benefit, right, people want to do it more for reputational purposes than a need. Let's say if they were an RIA or somebody who was actually regulated in the US, they see regulated custody as the way forward to be able to get trust with their clients, trust with the market, and then just generally trust in the ecosphere that they're doing the right thing for their end investors. I would also say too that they need to be able to understand the tech to such a degree that they can ask us for pen testing results. What is our uptime? How do we actually ensure cold storage as a differentiator? How do we make sure that that cold storage product actually does what it says on the tin at the end of the day? And really one of the ways around that is allowing the clients to come in and lift the hood to some degree, right? Allowing them to look at our code, look at our operations, and look at the way that we provide protections, whether through MPC or cold storage or basically HSM structures, et cetera. And I think we have to look at it with a lens that not everyone's going to be in the same place that people on this call or listening on this call are in regards to their understanding of cryptocurrencies, and simply being patient to help them get to that place where they can actually create a network and create a framework internally to be able to approve a vendor like ourselves, either as a sub-custodian or a technology vendor to themselves for self-custody.
Super helpful, Steve. I think there's a lot there for someone to go over, particularly with no context. Do you have any resources you point people towards, or where should people go to try and learn more so that they can come in and educate themselves?
Tough. I mean, there's a lot of stuff out there, right? If you're willing to have a conversation and basically, I don't want to say, open kimono, right? But I think all of us on this call would be willing to just have a general education conversation with clients who are looking to enter into the space. How do you actually think about getting an investment guideline approach approved for cryptocurrencies? I'm sure we all have thoughts on that as well too, right? And basically, how do you actually structure a program, more importantly, to use a vendor, again, either as a technology provider or as a sub-custodian? Not to say that we're all going to offer a full consulting service in that space, right? But we can help lead people to water in regards to how they actually need to develop those programs.
Yeah.
I didn't mean to put words in other people's mouth here, of course, by the way.
No. Yeah, I wanted to definitely follow up on that. That's absolutely the best way that I have seen customers get comfortable coming in and talking to us, at the very least, because that's, I think, the most engaging way to learn about the space, and we're more than happy to do it. We've also seen customers bring, their own third-party security firms that are helping them assess the security of custodians, and we've walked them through in tandem all of our solutions. I think if you're looking for resources, just to create this baseline, sort of what are the words that we use, what are we talking about, and what do we actually mean by it? At Anchorage, we do our best to be no nonsense about this. I'll semi-shamelessly plug a primer that we wrote a little while ago about end-to-end security, how to think about what we think of as the four aspects of private key security that customers need to build a framework around, that start at generation, storage, access and responsibility around their digital assets. And I, again, tried to be as I understand that we're providers, try to be as little bias as possible in that framework. So I'm happy to send that to the group after the webinar.
Yeah,
So I think
appreciate
that's a really good point that Boaz brought up though too, which is the third-party audit companies, and there's a lot of them out there, right? I think for like a big financial institution to be able to appoint a vendor, they're probably going to be looking for some kind of validation in that form as well.
Yeah.
Yeah, and definitely gaining certifications, security certifications for our solutions helps. Of course, Ripple.com has a lot of resources for anyone who wants to learn HSM versus MPC, custody, payments, anything around digital assets. But similar to Steve and Boaz, we also seen customers coming to us, and because Ripple has been in the space for a very long time, customers do come to us to kind of not only to explore our custody solution or payment solution, but also even kind of as they start their journey within digital asset space. Very often they do want to have more deep, more strategic engagement with us, sometimes even on multiple use cases, custody, payments, Ripple stablecoin will also launch that. So there is definitely kind of, we are seen as one of the longer standing company in the space. So we definitely also try to engage with customers on a kind of more strategic and multi-product level, not just custody.
Oh. Okay, great. Lots of helpful resources there. I think actually Ripple, as you said on the website, Fireblocks on their website, and Anchorage as well, all will have resources. So feel free to check them out afterwards if you want to go for more basic terminology and understanding what's happening. Taking a step up again, we talked a lot about having something global. And I know that's, Ripple is global, Fireblocks, the tech company, is global, Fireblocks Trust obviously being the US, and Anchorage is also pushing for a global reach as well. What are the differences in custody globally? What do regulators want in different environments? What are they asking for? And how difficult is it to change up your offering from place to place? I'd love to hear from, I think Steve was the last person I called first.
I'm going to have a limited response on this one simply because our trust company right now is very much US focused. I will say, however, that we do have a fair amount of clients reaching out to us from various locations asking if they could employ the services of the trust company. And so my response to that would be is that international clients who are interested in getting a US custody solution just need to make sure, particularly if it's a Department of Financial Services regulated product from New York, that they're willing to open themselves up to US oversight and governance because of the fact that we, of course, are governed in that way as well too. So that means that their activity would also be viewed under that light. The benefit of that, however, of course, is you do get the regulated product that then also offers the insurance as well as the investor protections coming through a regulated product, but also makes it a bit more complicated in regards to contracting and general oversight of the vendor. So just some things to think about as they go through that process.
Thanks, Steve. Boaz?
I'll say maybe counterintuitively, one of the things that we really appreciate about the way we built Anchorage is that we're able to offer essentially the same product under different jurisdictions in exactly the same way. Ultimately, when we build a sophisticated technical crypto security solution like this, there is no regulation that can tell us to do better than what we as experts built on day one. We are the ones who are setting sort of the standard and the precedent for what good security looks like. And as an industry, this comes to us, right, to set that standard. So what's been really nice is, in terms of a core product perspective, our offering in the US, our offering in Singapore, and to a large extent our self-custody offering look and feel the same, operate the same way, and under the same bounds. Where you'll see differences is under the regulatory requirements and various compliance requirements. We do our best to keep those behind the scenes as much as possible for our customers, and we put a lot of effort into streamlining that experience so that basically customers can focus on getting the thing done that they want done rather than a jurisdictional difference. But it's been quite heartening to see, regulators in different parts of the world approaching crypto in a serious way, in a knowledgeable way, and being able to deliver great products in that way.
Great. Jana?
Yeah, from our perspective, I think this is simpler because we're selling a technology, not regulated service, so we don't need to acquire licenses or necessarily comply with very strict regulatory requirements. However, as I mentioned earlier, we definitely see regulations emerge across different markets that specifically regulate how custody should be done by financial institutions. And then that in turn sometimes have, well, not sometimes, a lot of times have impact on our product requirements and on product capabilities or product functionality that we have to offer. One example, again, on-prem versus not on-prem. You would think, or we thought that offering SaaS product would kind of be acceptable in most of the jurisdictions. SaaS onshore versus offshore could be solvable. However, we are seeing now some of the regulators do require key management to be definitely onshore and sometimes on-prem, and even the transactional layer, because it's a critical financial infrastructure, has to be onshore or on-prem. So having in our case, we don't need to necessarily comply with custody license requirements, but we do need to make sure that our product is flexible enough to comply with the requirements of what our customers may have. The other thing is also that sometimes customers interpret regulations differently. So, for example, one customer may think that they need redundant custody solution. Other customers may not think they need one. But if only one customer does have kind of requirement on a fallback solution, that we will have to make sure that we have a fallback option integrated or available in our product. So it's definitely reflected more in the product capabilities that we have to kind of enable different architectures and different kind of think about how we offer the product within different markets. One other thing is that because we're seeing more and more customers wanting to have all-in-one solution, a lot of times that means our product is integrated with other digital asset services, for example, compliance or tokenization. And of course, within different markets, then you see different vendors or different type of solutions that customers prefer. So then in that case, we need to make sure that our product works very well and natively integrates with not only, say, compliance tools that are common in the United States, but also compliance tools that are used in Europe or APAC. So that's definitely becoming another kind of requirement, again, on the product to make sure that we do offer a variety of capabilities that then serve the needs of customers within different markets.
Well, one area of flexibility I think is interesting, it's been a little bit of a lesson learned for us too, is that if we, let's say, as the U.S. digital asset custodian, contract with an intermediary in another country, and we don't actually have to touch the end investor, that does give some flexibility in that regulatory construct. I don't want to say that's in every situation, but it is something to investigate if, in fact, you are looking to employ one of our services.
Okay. Thank you, Steve. One thing I thought was interesting that Steve touched on at one point is insurance, is that if we're moving towards this more institutional focused, larger traditional audience, one of the things I'll look for is insurance. That, hey, what happens in the worst case scenario? Can I be covered? And that's obviously a big issue in crypto today, as insurance is both hard to come by, there's not that much capacity, and very expensive. How do you guys currently think about it? Do you think it will change going forward? Would love your thoughts around this area. Start with Jana.
Yeah, insurance hasn't been a huge requirement for us because again, as a technology provider, our customers are not asking us to provide insurance. Our customers use our technology to then offer regulated customers to their institutional clients, and then our customers do need to get insurance for that. What we've seen is maybe it's not necessarily insurance, but more like fallback, where there is demands from regulators for custody solutions to offer fallback functions or functionality, where if Ripple goes away, how can our customers get their funds? Or if our product is running on a cloud operator or cloud provider, and the cloud provider goes away, what's the business continuity, and how our customers can get back up and running and continue serving their customers. So that's been definitely big topic for us. Insurance definitely hasn't come up that often.
Yeah, that's helpful. Boaz?
Insurance is one of those topics that sounds temptingly simple at the top level, but to really understand it, you can go very deep. I'd say at the highest level, insurance is a company, and a custodial company having insurance is a great way to know that you had yet another set of institutions who have skin in the game, have evaluated this custodian security and have allowed themselves to insure it. What you don't know maybe is what rate the custodian is paying. And so that's a good checkbox if you're looking for a checkbox. If you're really caring about the quality and value that you are getting out of the insurance of your custodian, there's a lot of things to look into. One of them is the type of insurance. Specie insurance versus cybercrime insurance are very different from each other and protect against a very different set of concerns. And following that, the life cycle of the asset life cycle within an organization and within custody, sometimes depending on the custodian, has it moving through various places. And the custodians often will happily market their largest insurance policy that they have, but the times when your assets are most at risk, sometimes those assets are not insured. So at Anchorage, we have a fairly simple model. We have cybercrime insurance end to end from the time the assets are on platform to the time they leave the platform. But also we know that insurance in the crypto industry is a complex topic, and so definitely encourage people who care about it to look deeply into it.
And I'll actually just I'm going to relate the answer to here back to a couple of your prior questions. So the first one, this is actually a perfect topic if you're looking at a sub-custodian or just a digital asset custodian generally, to think about when you're looking for selection criteria, right? How do they actually treat insurance? And I will say, just following on Boaz's points, that the insurance industry, and again, I'm speaking in broad strokes here, right? So doesn't offer, I'll say, the full amount of insurance that we would like to buy, simply, right? I think we have an appetite to buy more, but there's simply not underwriting appetite out there to be able to support us in the way that we would like. It also comes down to the question, again, if I'm going to go back to a prior point of what's your definition of held in custody, and how important is it for you to have all facets of your activity to be deemed held in custody? And I'll give an example of this. An example of this would simply be staking. Right. So when you're starting to think about staking, in fact, the assets actually, in a lot of situations, not all, do move out of the custodian's wallet and into I'll say, a smart contract where they're held during the staking period. Is that still deemed to be held in custody in that scenario? If so, does that mean that the insurance of the custodian actually applies in a scenario where, say, the validator or the provider went down, or something else happened that would then require a loss and a make whole by the custodian? We spent a lot of time thinking about that, and I think we've gotten our head around the fact that yes, that is an in-custody product. A lot of legal dollars spent on that as well too, I will say. But at the end of the day, it's really important for us to be able to ensure that we can give a clear answer to our client in regards to, yes, your assets are held in custody in these scenarios, and these ones they are not. And down the road, some of these DeFi opportunities that clients want to employ to be able to generate yield, those types of questions are going to become much more important because of the way that their protections are going to employ down to their end investor, right? And simply they're going to want to know where if something falls apart, that they're going to have this backstop of insurance or being able to be made whole by the custodian. And we don't have 100% answers yet, right? We're all working through that because we know that it's important, but it's a work in progress. I'm curious to see if Boaz has a reaction to that one.
But yeah, we spend a lot of time defining what it means to be in custody, and then what activities you're actually entering into, and whether those activities have risk, and where that risk is introduced, and whether it's custodial risk or otherwise. All great questions to answer. in the event that you should need it. Hopefully, you never need it.
Exactly.
Great. Yeah. I think it's a common challenge everyone's talking about. There's just not enough insurance to go around. So we'll see if that changes relatively shortly. Okay. One of something I think I'd like just to open up for everyone is like, what's on your roadmap that you'd like to talk about or you'd like to share with everyone? What's exciting that's ahead and what should people look for at Ripple, at Fireblocks, at Anchorage? I will start with Boaz.
We're building a lot of exciting things. I'll touch on one that I'm particularly excited about, and I think a lot about, which is the growth of our Atlas settlement network. We launched a settlement network called Atlas. This is a way for customers of Anchorage across the globe to be able to settle with each other, reducing counterparty risk, reducing operational risk, and doing a bunch of advanced activities that are otherwise difficult to do, backed by our regulated entities. Things like global instant dollar settlement, settling both legs of a crypto settlement, crypto to crypto or crypto to dollar simultaneously, doing that right where the assets stay in your wallets until the moment that they're not yours. We've onboarded some great partners. We just announced this week Wintermute on the Atlas network, and we're investing a ton into it this year so that all of customers' needs from settlement through collateralization, collateral management, through distribution workflows are all accounted for. It's such a huge operational risk reduction, counterparty risk reduction, capital efficiency increase that I'm just very stoked for the things to come here.
Okay, great. Steve, I know Fireblocks Trust is new, so a lot of new things on the horizon, I can imagine.
Yeah, I'll say that one of the things we're really interested in and happy that we're researching to be able to deliver to clients is yield generation products, right? So obviously we'll be delivering, of course, our staking solution, but also looking forwards to the future in regards to what is the Bitcoin staking model going to look like? How are we going to employ Babylon to be able to increase that staking capability for clients? Tokenized money market funds, as well as simply being able to offer other yield generating opportunities for clients within the custody product. As I mentioned earlier, too, we also are spending a lot of time working on collateral management solutions as an end-to-end, I'll say, opportunity for us to be able to work with clients on those borrow and lend use cases specifically. And then similar to Boaz, where, of course, we have what we call off-exchange service, where we basically offer an escrow service to other trading counterparties to allow those clients' assets to be able to be used as collateral and credit line collateralization for trading activities, and then near instantaneous settlement at the end of the day. And then rounded out on our end, of course, too, by those token generation events, which are obviously very important in the marketplace at the moment.
Great. Lots on the roadmap. Exciting. Yana?
Yeah, also a lot of exciting things. I'm not going to announce anything, otherwise our marketing team will murder me right outside this room. But definitely, I know it's a challenge for all the custodians. Adding more chains to the custody product, definitely something that a lot of our roadmap is dedicated to, adding more blockchains, adding more tokens. One cool feature we are building is dynamic, adding blockchains dynamically, where our customers will not need us to do it or will not need to depend on our roadmap until certain chain or certain token show up under their custody. We are kind of looking into a way to enable our customers to add ledgers dynamically, depending on kind of for certain protocols. It will be done very easily by our customers without us needing to make core product changes for each chain. So that's definitely something we are focused on, making sure that as the industry evolves, as the industry matures, that our customers, our solution also scales and matures, and our customers can depend on us kind of delivering the features or delivering new chains. The other one is kind of building more native integrations between our products, kind of custody, digital assets, payments, stable coins, a lot of those. As you can imagine, there is a lot of use cases that kind of require 2 out of 3 or 3 out of 3. So making sure that we have we have native or seamless integration between all our 3 products is also something we're definitely spending time on, and kind of getting ourselves or making sure our products will become in this digital asset infrastructure for our customers to use, regardless which use case or which type of application or business they want to build within the digital asset economy.
Great. Lots of exciting things on the horizon for everybody. Thanks, Anna. One maybe backward-looking question is that we saw over the last year interest begin to emerge in digital assets and crypto again. What changed from a client perspective over that year? What different things were people looking for, if any, and what type of engagement were people having that they weren't before over the duration of the crypto winter, that let's say? Did you guys see anything different happen over the last year or so? And does that help us understand what people might look for over the next year as well? I'll give that to Steve.
Again, somewhat limited just because of our experience in the space of just starting out. But just personally, what I've seen is I think it's been interesting how an awareness has been developing amongst, say, VCs that they might eventually be converting into RIA structures. And what does that mean for their need for regulated custody services at the end of the day? Starting to see actual, let's say, legacy RIAs opening up the space in regards to, we want to get involved, we don't want to miss the boat. Kind of to your point earlier, Harry, how do I get started in this space? And those conversations actually starting to build, even through some of the crypto winter. And obviously, of course, the price acceleration has helped that out over the past few months, but really building. And I think it's really just a question about general awareness. I will say from a pressure point perspective, coming back to some of Jana's comments, there really is an urgency for us to be able to deliver more of these end-to-end solutions in a comprehensive way, which is going to put a lot of pressure on our tech solutions, right, as well as dollar investments to be able to make that happen. But I think that people are going to really use that as a selection criteria going forward.
Thanks, Steve. Boaz?
I'll first say what I'm happy hasn't changed, which is throughout both the quieter period in 2023, beginning of 2024 through now, has been the growth of new protocols launching, people developing new ideas, and starting new companies and new businesses around this has been really great to see, and that's only going to continue. And I think that's at its core, that is the promise of this space. What's definitely starting to change now is a lot of the activities that folks have been wanting to do, and we saw tamped down over the past few years, have been accelerating. So what I would view this as like nothing deeply new, not for folks that have been in the space, but an acceleration of the timelines in a way that's very exciting. I mean, on the face of it, and you guys have all seen it, ETFs now beginning to convert or launch new staking ETFs of various varieties. So these are wrappers for more folks to participate in the ecosystem. And those are things that we very much looking forward to supporting. The continued adoption of stable coins, and I think a real now embrace of stable coins as a payment mechanism, and tokenized money market products as a way to have mobility on your collateral has been growing a ton. We launched on this front a partnership stablecoin with Robinhood and Kraken called USDG, and this is a recognition that folks want to use these stablecoins in their day-to-day operations and want to be able to receive the yield from those stablecoins as well. And of course, actually, interestingly, an even greater emphasis on regulatory compliance and that qualified custody status. And that's actually because the adoption of crypto is finally able to move down the risk curve from folks, from being with folks who are super high risk, super forward looking, to folks who are more traditional, more and more, and wanting to stay within the frameworks that they're used to. I think we're going to see a continued acceleration now over this year and over the next coming years. There's going to be a lot to do.
Exciting. Jana?
Yeah, I'll echo both comments about tokenization. Tokenization now comes up in every single custody conversation that we have specifically with banks. For a lot of them, it's real. There are a lot of them experimenting, trying or figuring out what's their business case for tokenization. And for some of them, it is the future use case that they know they want to make sure they can do, so that even when they decide on a custody product or custody solution, they want to make sure that end-to-end tokenization capabilities are part of the offering. And what's interesting about tokenization also, it's not only tokenization in a way that creating a smart contract, deploying the smart contract, creating policies around who can mint, can distribute and all of that, but it also a lot of the customers now also thinking looking into what will be the utility of those tokenized assets, what are the distribution mechanisms, who the investors will be, and they do want a solution that will not only offer mint burn contract deployment, but also will offer compliance, compliance KYC for investors, ability to kind of offer those assets to investors, tokenized real world assets to investors, trade them, distribute, and also do kind of regulatory reporting, servicing those assets. So there is a lot of definitely seen in the last year. Almost every custody conversation starts with tokenization use case or kind of our customer or prospect going into tokenization use cases and kind of trying to understand how our custody product can enable them and how it can scale in the future.
Really interesting. I think we have time for one more question, and I'll pick one question which kind of follows on from that, which is related to stablecoins, basically tokenized money. Obviously, top of mind for a lot of people, stablecoins. People talked about 2024 being the year of stablecoins. Do people need to have stablecoins in qualified custody for payment providers? Should they be considering custody? Should they be considering wallets? How should people think about that? Steve, would love your thoughts.
Yeah, so interesting. At the moment, right now, our solution, for example, is receive and deliver only with a cold custody. So right now, stable coins are not important for our clients. However, as soon as we start to tie in, border routing solutions, it's absolutely going to become a requirement that people are going to want to use those as the settlement leg for their transactions. And then, of course, as well, too, anyone who actually runs a business and going forward on a global nature is going to be looking for stable coins as that payment arm to be able to facilitate transactions globally. So I think it's going to be increasingly important for digital asset custodians to support a broad swath of these, I'll say, stable coins to be able to satisfy various use cases across their clients.
Great. Thanks, Steve. Boaz?
Absolutely agree. I mean, stablecoins is a use case. It's two questions that you sort of asked, Harry. The first is stablecoins is a use case as people want to adopt them for payments, for global distributions and payouts, for general cross-border, and also what people don't often think about is multinationals doing intra-company treasury management. Stablecoins are really useful. And on the face of it, obviously, this is a more efficient technology to do a thing we're already doing. Where you keep those assets is on a company by company basis. This is the tool you need to solve. You use the term qualified custody. It's pretty strange that this has become a marketing term within the crypto ecosystem. It is like a specific term of art within the broker-dealer space, the security space. In general, I would encourage folks to think about whether they want to do self-custody and then how they want to do that self-custody, or whether they want a fully custodial solution, like a bank in the colloquial sense, not even necessarily in the literal sense, and how they want that relationship to consider. This is a product offering. These are all just product offerings. Everyone should be looking at implementing it in the best way for them. Anchorage offers a wide variety of solutions in this case, but I do think that we offer a fully custodial solution to begin with, because and we offer that under a framework that we think is relevant to the most people, because I think that is the way in which most people want to get the job done, and then we have a gamut of solutions to support it.
Thanks, Buzz. And yeah, fair point on qualified custody being bandied about as a term when not always being used correctly. Jan, I would love you to close it out.
Yeah, I definitely think self-custody makes a lot of sense for stable coins, especially if a customer using stable coins to do a lot of supplier payments or manage their treasury, if it's corporate or even financial institutions, stable coins do make a lot of sense. And if you using self-custody, you also can transact. You can transact very frequently and kind of accept payments from different vendors. So I think self-custody does make a lot of sense for stablecoin, almost kind of having your treasure chest that are right under your keyboard. So definitely self-custody for stablecoins.
Okay, wonderful. Well, unfortunately, we've come up to time. I really enjoyed this. I thought this was really, really interesting. Super glad to get 3 different perspectives and a lot of collective wisdom together in one place, and hopefully answer a lot of questions that people had. So thank you so much, Jana. Thank you so much, Steve. Thank you so much, Boaz. I really appreciate you coming out. Is there anything you guys would like to say to people as we close it out? Steve?
Now, we really just want to say thank you for the opportunity. And, as everyone has mentioned, we really do see this is going to be, I don't want to say the year of custody, right? But there's going to be tremendous improvement in the space over the year. And we want to work with our clients and the industry to be able to make that happen.
Jana?
Yeah, thank you for having me. Super excited for this year. And it's been quite a journey in crypto and blockchain. And I'm very excited for this year. I think it's going to be transformational for a lot of different companies within the space, including Ripple.
Exactly, a big one. Okay, Boaz, please close us out.
Thanks, Harry. Thanks everybody. As you can tell, this is a thing that we're all really passionate about talking about. Thanks to the Boston Blockchain Association, we have some Boston members of Anchorage who are members of the association. So I've heard it's good things. If you want to talk more, I'm boaz@anchorage.com. Feel free to reach out.
Wonderful. Okay, great. Thanks so much, everyone, for attending. Thanks to the speakers for talking. Good night.
Thank you.
Bye, everyone.
Later, guys. Bye.